Hello, everyone, and welcome to another edition of the AI Cash Grain Podcast. I am Satish Nandapurkar, Director of Data Driven Strategies for Quantum Hedging, and today is Friday, August 2nd. In this week's podcast, we'll talk a little bit about corn and beans. We'll first go to Cy Monley, who'll talk about that and sort of the trader's perspective. As always, corn and beans continued their slide downward. Corn was down 7 cents to 403 and a quarter. Beans were down 21 cents to 1027.25. As for our models, both corn and beans, our models are kind of down the middle, pretty neutral. When you look at what they're saying, Kevin will come on and talk a little bit about that. I'll also talk a little bit about seasonality and what's driving some of this neutrality, this neutral view in corn and beans. The fact that right now, seasonally speaking, there really isn't much of a trend from now until, say, October 31st for either corn or soybeans. And then we'll talk about the recommendations. Right now, the recommendation is to hold because we just did a sale. If you followed our alerts, we sold 10% in corn, we sold 15% in soybeans, and I'll review those sales in the recommendations section and talk about where we stand. In both cases, we're ahead of the benchmark in terms of our average price. So we'll go over that as well. But first, let me turn it over to Cy, who's going to talk a little bit about the state of the markets, what the traders are looking at, and sort of a fundamental view. Cy, take it away.
Thanks, Satish. You know, the coffee's hot, but these markets are not. It sure feels like we're trying to find out how big these yields really are. Some people are talking 185, 186 for corn, a 53 for beans. The idea is that, my goodness, we're going to find out that these crops are really big, given how wet and how hot it was. Now, I get it. We're going to price that in, but the function of the market over the next, I would say, 30 days is to kind of bring out that selling of whole crop corn and beans from the farmer and start to set some lows for the farmer selling. Right? It's scary, but this is kind of when farmers puke. They have delayed pricing, and so they'll start to price a lot of those old crop beans and corn here over the next 30 days. And I feel like that's what we're going to do. The market's kind of drifting in the demand. We need to see more demand, I think, to get the market excited. We haven't seen it yet. But until we get this massive farmer selling and you flush this old crop out, and you find out how big this new crop is, it's really hard to get a rally. So I think for the next 30 days, we're just stuck, stuck kind of drifting lower, looking for those demand things. Now, I will say the one kind of glaring idea that two bull markets could come out of wheat, right? If this global wheat crop is lower, and it could come out of soybean oil. So I think for the next 30 days, we're not pricing that just yet, but that's one thing to keep an eye on is can we start to see some more China buying beans? Can we see the soybean oil market start to light on fire as it looks like the global oils could be tight, coupled with a global soy oil issue, right? You've got some other oils that are starting to see a problem. So those are things to be on the lookout, but not yet. You got to kind of drift lower and looking for some stories to turn over. Kevin, is there anything in our models that's pointing bullish?
Hey, thanks, Cy. Our corn model really is kind of flatlined as we get into the last half of the growing season here. Good 3 months till the end of harvest. And, there's really not a lot here to kind of suggest we're going to see a return to better prices. Our range of expectations continues to shrink. Right now we're kind of in the low end of expectations is 370, high end of 440. I know producers are going to be underwater at this point. Some crop insurance likely starts to kick in, depending on your policy coverage, because we've had fairly sharp sell-off since February's prices. But, overall, back to the models, just not a lot here for corn to say we're going to do anything other than kind of flatline. And that's, really on par with kind of the seasonal tendency. We do have a little bit of more seasonal weakness that tends to take us into late September, early October, with a little bit of bounce usually in the last 3 weeks of October. And so, those moves are traditionally not very big, especially when we've already made big moves as we have this growing season. So I would say, our best expectation is that things are going to remain flat for the next couple months. And that's kind of where we'll see things. In terms of our probabilities and our forecast by end of month, nothing here that's really kind of earth shattering or shocking. Again, kind of keeping us in that, 390, 380 range, with maybe some chances of getting, above 410. But again, nothing really sharply moving us one way or the other. For beans, more flat line here, a little bit of potential for August to kind of improve. But that even seems a little hard with some of the weather forecasts that are turning more favorable. So a lot of the heat is eliminated from the forecast as we look at some of the GFS runs here of late. And so there's nothing really on the weather side that could potentially change our yield outlook and situation for that. So our range did move down to $9.50 to $11. But again, nothing really suggesting we're going to see sharply different prices from where we're at today. Probability wise, pretty decent chances we'll stay in the low $10 range for the balance of the growing season. So that's what we've got. Satish, what are we seeing from kind of strategy standpoint?
Thanks, Kevin. As always, really interesting to see what the models are saying and what the data is telling us. Let's go to the recommendations. Just reviewing again, our goal is to beat the benchmark. The benchmark is a predetermined strategy of selling an increasing percentage of bushels each month. At the end of July, the benchmark sold 15% of their bushels on July 31st to get to a total of 55% sold in both corn and beans. So our goal is to beat the benchmark by the end of the year by sometimes being oversold and sometimes being undersold based on our views of the market, or the models, really the models view of the market and what that does in our simulation system. So looking at where we stand in corn and beans, with respect to corn, we are now a little bit oversold. We're 60% sold because we did a 10% sale. We sent out that alert and said sell 10% on July 31st. The benchmark sold a full 15%. The reason we said only sell 10% was we were already oversold. So we were 10% oversold coming into the month end. Now we are 5% oversold going forward. Our average price is $450, $463. The benchmark's average price is $442.30, which is great. We have a slightly bearish stance with this 5% oversold position. If we continue around this price at $4, and if we continue to make sales, and the benchmark continues to make sales, we're gonna end up with about a 9.5% beat versus the index. So far so good. We're gonna end up with about a 9.5% beat, or 9.5 cent beat versus the index by the end of the year, based on where we're at. Now, taking a look at beans, we were even with beans going into the end of the month. We were 40% sold. The index was 40% sold. We recommended staying even. We sent out an alert, said sell 15%. The benchmark also sold 15%. Coming out of that, our average price is $1128.95. The benchmark's average price is $1120.30. So we sold 15%, so did the benchmark. We now have a neutral stance versus the benchmark. And if we stay right about here in the bean price, we'll track to about a 4.8 cent outperformance. So again, we will beat the benchmark. We will get to our goal, but not by as much of a beat as we had with corn. So, but good, we're ahead in both cases as of now. So before I go to the summary, I typically do a features of the week. This week, I really want to give you a different angle under the hood of what we do. here with the data. What we always start with, what the data always starts with when we're looking at forecasting a period, let's say from now until the end of October, is we look at what has typically happened in the market. We look at the seasonality. Is there typically a trend from now until the end of the year, up or down? For corn, when you're in mid-June, the trend is definitely down. From mid-June till the end of September, the trend is down. But right now, we've already gone through that, end of June, July period. We've dropped a lot. So where are we now? And when you look at the seasonality as to where we might go from here, the beginning of August, till say the end of October, 3 months out, seasonality doesn't tell us much. When you go back historically, the graph that you see on the left here is what corn prices have done from August 2nd till October 31st in each of the last 28 years. And you can see there's a lot of ups and a lot of downs. In fact, on average, when you average it all out, it did absolutely nothing. On average, it's zero. It did go up and down some years, sorry, but on average, it's zero. It went up 12 times, it went down 16 times. It went up more than it went down. So on average, when it went up 12.7%. On average, when it went down 9.6%. So it went down more than it went up. But when it went up more than when it went down. And that kind of averages out to zero. How many years did it go up more than 10%? Like how many years would we finish 40 cents or higher, right? From where we are right now, 6 out of 28 years. How many years would we finish 10% lower? 5 out of 28 years. So really, we're kind of, from a seasonality perspective, there's no real trend here when you do a historical analysis and say, hey, is corn more likely to go up or down based on what normally happens at this time? Soybeans, very similar. You look at the pattern of soybeans, there are, out of the 28 years, 14 up years, 14 down years. On average, we went up less than 1%. When we went up 10.7%. When we went down 9.1%. Half the years we went up, half the years we went down. There's one big outlier year here. In 2003, we went up 53% from August 2nd to October 31st. Corn did not do anywhere near that well. I think corn was up like 16% during that same period. So that's kind of a weird outlier. You take that out, where it's really the same thing. It's on average, there's no seasonality here from now until the end of the year, and it's just as likely to go up as down. When, how many times did soybeans go up or down? 10% in both cases, 4 years that we went up or down, 10 years. Another thing I should say is corn and soybeans from now until the end of the year are very correlated. I'm not going to publish the graph here, but there's about a 0.8 correlation, which is a pretty strong correlation between corn and soybeans for the rest of the year. Now, what we try to do is we respect this seasonality. So we look at the seasonality and we look at all the data as we stand right now, and we say, is there any data? Are there any tells that would say we're in the type of year that soybeans typically goes up, or we're in the type of year where soybeans typically goes down? Does the data match a pattern? And as Kevin talked about, the data isn't really matching a pattern. The data is saying kind of neutral, right? In terms of what it's matching. It's matching as many ups as downs, and therefore it's coming out and saying corn and soybeans are kind of neutral for the rest of the year. With that data. So I just thought I'd talk a little. Typically, I'm talking about features of the week. What's a data item that's correlating strongly to it outperforming or underperforming what it usually does? This week, I wanted to show you what it usually does. And in both the cases of corn and in soybeans, from now until the end of October, it's 50-50 whether it goes up or down. And on average, it's kind of zero. It's right down the middle. And with that, just a quick summary and recap. Corn again was down this week. Soybeans were down this week. The rain and the heat have been ideal for big yields, as Cy talked about. For beans, same thing. Rain and heat have just been ideal. So Cy did mention that possibly soybean oil could spark a rally somewhere down the line, 30 days out. That's what they might be thinking. But for now, it's just those big yields that everyone's looking at, finding demand for all that supply. The models are kind of right down the middle for both corn and soybeans, kind of straight across the board. And with respect to our recommendations for corn and soybeans this weekend, the recommendation is to hold because we just made recs in the middle of the week to sell. We recommended on the end of the month on July 31st to sell 10% in corn. We're a little oversold in corn, just a little bit. We recommended selling 15% in beans. We have a neutral stance in beans. So we'll see how the data goes and the market continues to move as we get into October. And we'll be pumping those into our models and our simulations. And we'll see if the models want to go away from where the benchmark is. So we'll be back to you next weekend again on the AI Cash Grain podcast. I'm Satish Nandapurkar. Thanks for being a subscriber and thanks for listening in. We'll see you next week.